Hi guys, welcome to honeystocks.com midweek analysis for the 18th of December 2019. I really just kind of want to start off just by thanking everybody who reached out to me privately and kind of encouraged me after the last video that I did, obviously with the format that you're currently watching at the moment, the first time that I've presented on camera and so forth. So I do appreciate that. But what I have for you today, I have around, I think there's about 12 charts, maybe 15 when I talk about the overall market. I do have a few concerns at the moment. My work has just this evening been published in a pretty well-known trading investing magazine, and I think the chart itself will make a lot of sense to you. But we are in a bull market after all, so we want to be buyers of stocks, we want to be buying weakness, but I do think that there might be a little bit of short-term downside, but we'll see how that plays out in the run-up to Christmas. I do want to apologise for the difference in audio. In a second, when I switch over to screen share mode, there is a very noticeable difference in audio quality. I don't know why that is. I'm not technically savvy to kind of figure out a solution to it. I just know charts. So yeah, hopefully you appreciate this, and let's just dive into the charts. Now, before I get into it, please pause the video. Just make sure you're comfortable with that before watching any further. Basically says that there's not any investment advice here. The interpretation of the data is all on you. I take no responsibility for anything because I know absolutely nothing. So I am registered with the CMT Association, as most of you probably know by now. I'm currently working my way towards my chartered status, so technical analysis is something that I'm widely known for. There's a lot of you, judging by the emails that I'm receiving at the moment, that are still having a bit of a problem, and you can't really get that consistency that you're looking for. If that's the case, please do subscribe to our channel. In the bottom right hand corner there is a little link for you, and that will subscribe you. Turn on the notification bell and you'll get any videos that I choose to upload. The other thing to quickly touch on is, at the end, I'm going to be walking through this offer. We're doing a Christmas deal at the moment, and given the success and the huge response to our Black Friday offer, I feel like we should just extend it since it's Christmas after all. So let's get into the charts now. This is the chart that I was talking about previously that was featured in a really well-known trading publication today. Now, what the chart is essentially saying, and this is a weekly chart for SPX, S&P 500 index, what we can observe when we get price extended above the 30 period weekly moving average, we can generally expect a return back to the mean. Now, what we can see over the course of the last 9 years, we've had 6 occasions where we've been above 7% above this level. Now, what we have now is we've got our 7th occasion, so we're now currently 7.1%. Now, these percentages are slight approximations, but I think you get the gist of what I'm saying with the chart. So what that leads me to say is, yes, we're in a bull market. Yes, we're bullish stocks, as I said a second ago. Yes, we can buy weakness. But for those of you out there that maybe have a shorter term time horizon, I think what it really means is that you just need to manage risk a little bit closer. Just make sure that you're extracting as much profit from the trades as possible. Those of you out there with options, etc., you don't want to see the value of your options just get ripped away from you. There's nothing worse. So I do feel like we're in an environment where we are a little bit overextended, and for me it just makes sense just to manage risk a little bit closer and maybe start to think about protecting those profits, etc. Now, for those of you that maybe don't know, Starbucks was a trade alert that I sent out to my subscribers and client group last week, and it's doing okay. It's off and running. The initial entry into Starbucks was actually an alert sent out around $81, and it's been moving very well ever since. But this was a compound opportunity, and I do feel like we are moving towards $100. Yes, we're going to always have to deal with these little sideways moves. That's perfectly okay. I'm not a day trader. I'm not looking to move in and out for little 50-cent moves. I'm in this for $20, $50, $100. Because that's where the big money's made, especially when you talk about things like options. A lot of you have been messaging me about Okta and the cloud-based tech stock, so I do have a couple of them that I really want to go over with you today, and Okta is one of them. It's probably the most requested of the tech stocks. I think the way we look at it now, guys, is we're bullish above the 200 MA. Now, the problem that we have is that if the market overextension proves itself to be true and we see a sell-off in the run-up to Christmas, which is entirely plausible, that's probably not going to be good news. So again, I think it's a case of managing risk, have your well-defined stop loss in place, and just be bullish above the 200 MA. But if it drops below, if you're taking a long-term investing mindset, that's a completely different conversation. But if you're a trader and time is a factor for you, I think that the 200 MA makes a lot of sense just to kind of keep an eye on it. And there's a few of you out there that are struggling with AYX at the moment. I totally get it. I think the thesis that I presented a couple of weeks ago really looked something like that, where we might be looking at a bit of an inverse head and shoulders pattern, and I've not ruled it out. I mean, I said at the weekend that I'm not ruling it out. I think we'll only know once price breaks above this 115 level. That would be the catalyst for me to say, do you know what, this may well be worth buying here. And I think given that there's a good 28-29% there upside, if we do get that breakout on an inverse head and shoulders pattern, then that's not a bearish signal by any strength of the imagination. But to the other side of that, we always must ask ourselves, what if we're wrong? And that level for me would be below $85. I do think there's a possibility that we do drop to 85 and test that level, but we'll see what happens. And maybe for those of you that are maybe new to the channel and maybe don't follow me as closely, when AYX broke this level here, my thesis was sell your position, protect your profit, move on. But I know some of you have been buying in up here. You've been buying this dip, your dollar cost averaging down, which creates massive mental hurdles. That's not my game. I prefer to buy stocks when they're moving up rather than down. It's just easier. Profit target in Nike has now been met just in time for earnings. Again, for those of you that don't know, there was an alert sent out at $91 to my group, my subscribers. The thesis was that we moved towards $100. We've actually moved beyond $100 now. So there is the possibility for a lot of my guys to hold through earnings if they choose to do so. There's enough of a profit protection buffer in place, which is something that I advocate strongly. I don't advocate jumping in a few minutes before earnings and playing the Vegas odds. I do think it's logical to have built-in profit to be able to hold through earnings with a little bit less stress. But yeah, profit targets now met, and let's see how far Nike goes. Twilio is threatening to do something. It's broken out of its downtrend line. It's not a convincing move by any stretch of the imagination. First, to hold my hands up and accept that. Again, my thesis hasn't changed. I think if we get a move back above $100, then that might be a level that we want to pay close attention to. Match is consolidating over the last few days. It's obviously broken out, very similar to Twilio, where it's broken out above its downtrend line, and now we obviously hope to get a bit of continuation, a bit of momentum, a bit of volume, and we'll see what happens with Match from here. PayPal, don't let the chart complexity here fool you. Let me just delete that. So PayPal is threatening again. we're seeing breakouts everywhere, guys. So when we get breakouts, we just need to be aware of what are the breakouts that we want to be allocating a bit of risk to. PayPal is a stock that I like very, very much. We're above the 200 MA. We're threatening to break out above previous resistance here. Bit of an ascending triangle also. So it'll be interesting to see whether or not we can get the move that will present 12-13% upside in a bullish environment. EHTH offered opportunity for those of you that know what you're doing. Again, for those of you that don't know, this is one that a lot of my guys have been in here. One of my girls just booked a $5,000 profit on this today, stopped out of the trade, but lo and behold, the price has dropped back to a logical level. We've had a bit of a bounce, so if we get a move to the upside here, I think you could probably buy the weakness in EHTH. But again, always be mindful of the levels where you might want to just say, do you know what, let's move on. So that's kind of where we are with EHTH. Trade desk, again, I still see this moving towards 270, 280. Yes, it's been stalling over the last 10 days. Again, fully accept that. But if you are in this game for big profits, you want to be holding, you just want to just manage risk. And I think, if you're maybe looking at this, I think you could probably just maybe place a stop loss now, just somewhere under there, about 240. I think if you break below that, then you could probably just say thanks very much. But ultimately, we want to be holding, we want to be aiming for this level and and beyond, hopefully. Electronic Arts is very close to breaking out. I think the chart probably makes a lot of sense to many of you. 40% upside, very, very interesting chart for me at the moment. Adobe, I presented a thesis at the weekend just saying I don't know if this is a breakout that I want to be buying. But it's moving. It's sometimes price doesn't need technical indicators. Sometimes price just does what it wants to do despite what technicals tell us. But Adobe is moving. Price is the number one indicator. So we have to trade with price. I do expect a little bit of maybe a pullback, maybe a retest of the 310, 312 level. That'll be interesting to see if it holds. But Adobe, absolutely still bullish at the moment. At the weekend, I highlighted Boeing as a triangle pattern. We've had a breakdown. We found support at a logical level of support. Now, it's really interesting because we obviously, when we look at this, we can see that it looks like a bit of a symmetrical triangle pattern. When we delete that, just based upon recent data, technical analysis, we always have to reevaluate the chart. We always have to build our thesis and make sure that our thesis is still current and up to date. And when we remove that level and obviously add in this level, which does look like it's very significant, we can then say, okay, we can now be bullish above this level. Now, a lot of my guys have jumped in on this. The risk to reward by moving in here is very, very good. It's even better if we can get a breakout above this descending trend line. So yeah, it's very, very interesting. I think that is really what you could hope for at the moment. I think if you're in this and you've bought this dip, I think reevaluation point would be as it approaches this level here. You might want to say thank you very much at that point and maybe wait for that breakout. But I'm sure most of you know how to manage trades and most of you know how to read technical analysis. So hopefully that just gives you my own personal insight. Roku is just flirting with danger at the moment. I know there's a lot of you out there that really like Roku. This is clearly a level that we want to be paying attention to. I think a close below this level is a problem. I think you would probably find that would induce quite a lot of selling pressure. Technically though, you can still be bullish above this level, but it's not a level that fills me with a lot of confidence. You guys out there that like Roku, that trade Roku, You are far braver than I. Yeah, it's not one that I'm tempted by, unfortunately. These momentum stocks, they're obviously incredible when they're going up, you know, hands up. But when they're going down, you know, it's a different story. The stress that can bring on you will shorten your life by a few years. So, yeah, Roku's not for me, but technically you can still be bullish above that level. Amazon is being a bit of a pain in the ass, actually. I get a lot of messages about Amazon because I made a comment, I think around a month ago, where I said, look, I think if the market is moving higher, it's difficult for us to, you know, build a scenario where Amazon doesn't participate. And Amazon is just chopping sideways at the moment, guys. That's just the way it is. It has to participate at some point. It's one of the biggest companies in the world. The stock market is on a rocket ship at the moment. You would fully expect Amazon to participate in any kind of rally. It's done nothing, literally nothing, for about 18 months. If you're out there trading Amazon, if you're out there, you know, buying the stock, accumulating, you know, it's not for me. It's not my approach. I think what you're looking for here is a breakout. And I think maybe a move above the 200 MA, but this is absolutely the $2,000 level is a reevaluation point, and you just, you know, figure out what you want to do from there. Lululemon looks like it's found a bit of support here around $220. So, you know, for those of you that are looking to maybe buy the stock, or maybe you're currently in it, we can clearly see that we've got a bit of a significant support level for price here. So I think at this point, although it's $25 away, I think given that we can see that price does tend to gravitate back to this level, it seems to just be one of those stocks that goes up for, you know, a few weeks, and then it has a bit of a nightmare and then pulls back. So I think technically, I mean, if you're out there with a longer term mindset, I think you could just say that you're bullish above this level. The level is rising, so you're in an uptrend, which is obviously what we want. But, you know, Lululemon, you know, hopefully we start to move towards 250 with that one. Hilton is absolutely flying. Again, for those of you that don't know, I've been highlighting this for the last few weeks on the move above $100 here. And, you know, 10% up in a month. This is a place that we want to be kind of looking at. I think we're due a little bit of a pullback, but ultimately, when we see significant resistance levels break, we can expect to motor on to the next one. Now, as we can see with Hilton, that level represents a decent bit of upside there. I would expect that to head towards about $128. So that'll be interesting to see what happens from here. But I think we just say that we're bullish above $100 in this case. Good old Tesla. Now, it's been a while. Now, this has been utterly incredible for two of my guys. Two of my guys bought this support level here. Obviously, it's been off and running, huge percentage gains. A couple of them have done options across this trend as well. We've got a breakout. Finally, Tesla is breaking out. Now, what we can say with Tesla is there's obviously a lot of momentum behind it. There's obviously a lot of hype. I love Elon as much as everybody else. Technically, where do we go from here? Well, I think if we can get continuation here. Now, let me just switch this to the daily chart a second. I need to just check something. Yeah, I think we can definitely be bullish. I think I would expect this to consolidate for a little bit. Now, given the nature of the stock, given the nature of the breakout, this could easily be $500 in the next few weeks. Absolutely. I think we just have to say now that we're bullish above this level and below it, because what we can say with breakouts is when we get failed moves, we get fast and aggressive moves in the opposite direction. And I think with Tesla, that would be the concern here, is if we drop back into this level, the concern is that that would be, you know, a point where there would be an unloading, a lot of selling pressure, etc. So I think if you're out there and you're in Tesla, you know, I would probably be looking to tighten up stop losses, protect profits, and just say, do you know what, we're bullish above this level, let's just see how far this thing will run, and then just manage risk. That's what it's all about. Cisco Systems is in a bit of a downtrend channel at the moment. This is one that I did a bit of work on for one of my clients today. This is a chart that's presenting many different technical scenarios, and when we get a situation like that where we've just got too many scenarios, we've got too many variables that could just, you know, crash what we think is true, I think it's just best to just leave it. I think when we look at the chart, I think at the moment that is the chart to pay attention to. I think we're currently in a downtrend channel, and I think in order for me to be bullish on this stock, I think we need to break out above that level, and then I think from that point we could then hope to see it move towards $58. Clearly there would be a lot of technical hurdles to overcome at that point, but I think you get the gist of what I'm saying with Cisco Systems. NVCR, again, very, very similar. If you're out there and you've bought this dip, congratulations, this is a logical level to buy the dip on. I think we're looking at a triangle pattern, and I think this is a level to pay attention to, and I think this is the danger level. HD, Home Depot, 200 SMA support. This is one that a couple of my guys have jumped in on, moving very, very well. I think, again, we just say we're bullish above the 200-day simple moving average in this case. And you hold, you manage risk, you compound, and you hopefully make a lot of money on the back of that. So I guess that's the analysis for you guys. Now, obviously I touched on it at the start about our Christmas offer. Now, the offer is ending next week, but what we are providing at the moment with our offer is we're offering full access to our technical analysis program. Now, this ends on Boxing Day, so for those of you that have inquired recently and are maybe putting things off until, you know, after Christmas, I totally get it. I mean, I'm not going to, you know, hold a gun to anybody's head or anything, but this offer will not be available after Christmas. Now, we have 1 year access to our premium weekend charting analysis. You also receive access to our trading ideas and our scans, which I'll show you in just a second exactly what that looks like. You'll have 1 year access to our trading community. If you need a second opinion on a chart, then I'll happily provide our own. And I think for $500, I think the value kind of speaks for itself. If this is your first time here, just to maybe introduce myself, I'm Sam. Like I said right at the start, I'm registered with the CMT Association. Hopefully the Scottish accent hasn't been too much of a burden on your ears for the last 25 minutes. But I also run honeystocks.com, which is a super well-known, super popular trading investing website. My work is featured all over the world. Trading publications, magazines, interviews. It's yeah, everything's there on honeystocks.com. And to touch on what I provide, and I don't know anybody else that does this, and I think this is why my work gets as much attention as what it does, is with every single trade idea that I post to my group, I'll log them on my website. Now, what you can see with these is the date that I have posted the chart, you can see the stock that I've recommended, you can see the price that I've recommended it at, and then you can go on and see what price has gone on to do. Now, depending on what your method for profiting in the market is, many of my guys obviously buy the underlying asset, many of them buy options. Now, the one thing that I teach, and one of the things that's part of our program, is obviously risk and trade management, how to maximize profits, etc. So obviously I understand with options it's a completely different ball game, and you need to manage risk a little bit closer. So hopefully what that does is gives you an idea of the types of stocks that I'm posting trade alerts on, and hopefully you can kind of figure out if this looks like a good place for you. But I'm not a day trader, guys. My time horizon for trades is generally weeks, sometimes months if the trade is going very, very well. So if you're out there and you're looking for quick in and out, I'm not going to be able to help you. But if you're somebody out there that realizes that that's a nonsense game, if you're somebody out there that's educated and you're looking to just kind of get away from the short-term trading nature, where 95% of traders ultimately fail, and if you want to come in and be part of a successful, hugely profitable trading community, I can't stress that enough. When you think about the numbers where 95% of traders fail, it's almost the exact opposite with many of the guys in my group. So bear that in mind. Now this is what trade alerts look like. Now again, I touched on it at the start. Nike, we had an upside target, 10% upside, that's now been hit. This is what an alert looks like. I fully justify everything. I fully provide instruction. Starbucks, again, $81. We've got our upside objective. Yes, price is moving up. It's moving nicely. Many of my options guys are absolutely crushing this one. Arrowhead Pharmaceuticals, again, I'll never say that I called this trade, but this is a chart that I provided one of my clients because he was thinking about selling his position. I think this is up at $70 now. He's made life-changing money on his options. That's just what I do, guys. I don't overcomplicate it. Again, here's another one, ENPH, $17. We're up at 26, 25, 26 now. This is it. So if you want to be part of a group like this, if you want to be part of a group that preaches rational thought, educated thought, and just doesn't overcomplicate it, then you're very, very welcome to register your details on our website. These are the types of people that we can help. I think if you're looking to get away from day trading, maybe you're looking to fit trading around a career, business, family, maybe you want consistency, maybe you want to learn as well. I think that's where our program kind of comes in for a lot of the guys as well, and I think that's why when I do these offers, why they're snapped up so quickly. But again, if you're in that camp, again, we can probably help, because there was a chap on StockTwits earlier on today that wanted me to explain the trailing stop loss and the many different applications that we have, and the parameters that we should really be looking to employ. And I said, I posted a link for my my Christmas offer, and the response was, YouTube's free. And I totally get it. YouTube is completely free, but I think when you go into it with the mindset of, if you wanted to be a heart surgeon, you wouldn't expect to go onto YouTube and learn how to perform heart surgery. Yes, you could go on and get some of the details, but it'll never make you a heart surgeon. And I think when you consider that trading can pay significantly more than a heart surgeon's salary, to try and do it on YouTube, it's going to take you forever. But, I guess that's where the mentality comes in, and, do you value education? Do you want to accelerate learning curves and so forth? I'll never judge anybody. We all have our own journeys at the end of the day. I just hope that everybody has a successful journey. But if you're in that camp and maybe you're learning from losses, honestly, feel free to jump onto our website, register your details, because we can probably show you a new way. But honestly, guys, if you've enjoyed this, please do subscribe to our channel, give it a like. It helps with the YouTube algorithms. If there's any stocks that are on the radar that you feel like should be on the radar, in the run up to Christmas or maybe after Christmas, do you think the market's going to correct? Do you think we're going to get a big pullback? Let me know in the comments. I'd love to hear contrary opinion. I think that's what helps us all grow at the end of the day as well. So from the bottom of my heart, guys, thank you very much for watching. This will probably be my last video for quite some time. I know that we've obviously got Christmas running up, so please enjoy your time off, enjoy your time with your family. God bless you all. Thank you.